Hello, how are you?
Thanks, Lawrence. We've caught up on a bit of time there. I was cracking the whip a little bit, trying to keep it rolling so we get through everything. I know some of you have travelled and we don't want to be here for all day. But Shane, let's just get stuck into it.
Where's your Dinny for Bitcoin t-shirt? Where's that? Why aren't you on brand today?
Yeah.
What's all this?
I'm trying to look professional.
69,000 and you're getting all flash and fancy on me, huh?
Yeah.
See how this is going.
Since we hit that all-time high, I decided I'd put on a pair of trousers. But let's get into you. You're a mover and a shaker. You've been doing a lot in this space. You've been around. You've seen a lot. You've done a lot. Just give the audience just a little introduction to yourself and what you've done and what you see.
Well, first of all, thank you very much, Dinny, for organising this. It's excellent and lovely to meet so many people here. Great to see some of the first-time people at a Bitcoin conference. As you can probably tell, I am from Dublin. I left Dublin back in 2000 to further a career in investing in London. I followed over my brother, who's also in the house today, to originally to work for an investment bank as a trader. Of course, I submitted 30 letters. I got rejected on all of them but one. I then got a job working for a family office making investments. We did that for about 6-7 years, very, very successfully, investing into IPOs, not ICOs. And then ultimately I further went on to work for one of the biggest macro hedge funds in London called Bluecrest Capital Management, where I was a portfolio manager. So I've got a really good understanding about macro trends, and really macro trends are about spotting things before anyone else does. So when something is so early on, that's got so much upside potential if it carries on, and how to manage and put on that trade. And so throughout the 2012, 2013, 2014, working at a tier one hedge fund taught me a lot about managing risk, which really helped me later on in my life. I then had my own family office, and it was during this time where I thought, hey, I'd worked for a hedge fund, I've been a broker, I've now got my own family office. And I thought that was me pretty much done. I didn't think I was going to see a trend like the early tech days, or like the big property boom that we saw, the credit markets. I didn't think I was going to see a trend develop like it did. Until early 2017, I stumbled on this thing called Bitcoin. And I knew within probably about 30 seconds that it was digital gold. And I could understand the finite supply and what that actually meant. And when I realized that it was a peer-to-peer electronic cash system, which was actually evolving so much quicker and so much onto that, I realized it was an asset that I wanted to own. It actually took me about 3 weeks to buy Bitcoin back in 2017. It was actually very, very difficult to buy. And when we went to buy it for our family office, I rang up all the brokers that I had previously dealt with, and nobody could allocate Bitcoin to me. Actually, the price of Bitcoin, just so you know, was probably trading just over about $1,000. And by the time we put on the trade, it had gone to $1,300. I thought I'd missed it. It had gone up 30% in my face. I was really pissed. I was like buying at the all-time high. And there's a saying that you always get Bitcoin at the price you deserve. What I didn't realize is that it wasn't about just, hey, I've got some Bitcoin, that's great. It was about actually a new emerging digital asset class. And when I started to understand the power of the technologies, it was like the digitalization of value. You know, we had seen the digitalization of mobile communication. We had seen Web 1 and Web 2 from going, from reading to writing. Now we have the ability to exchange value and trust. And so that was really, really, really the moment where I was like, holy shit, this could be a challenge to money supply in general. And so I spent my life's work now, 7 years, solely focusing on digital assets, and of course Bitcoin being the OG. I'm a total hodler. I've got diamond hands, and I think one of the other gentlemen was like, when are you going to sell? Never. It is an asset for life.
That's awesome. And when we done for a show of hands, it was a bit of a surprise to me that a lot of people, it's their first Bitcoin conference. I sort of assumed that a lot of people were more OGs in the space, and that's absolutely awesome. And that's why I think some of the knowledge that Shane will be able to share about volatility, because really that's the difference between your success and failure in this asset. Is Peter Dunbar refers to it as eating glass, your ability to eat glass, which is, a horrible thing. But that's hodling Bitcoin. It's a horrible thing. Your net worth price in Bitcoin fluctuates insanely. But I remember a conversation we had in the bear market a couple of years ago, and it was pretty brutal. And I was just saying, like, it's so cheap. Why don't people see the opportunity? And we were trying to get as much capital as we could to acquire more Bitcoin. And you said to me, yeah, Dinny, like, has anything broken with Bitcoin? Is there still a block every 10 minutes? I'm like, no, nothing's broken. There's still a block every 10 minutes. It's still the exact same Bitcoin that it was at 69, that it was at 1,000. Hasn't changed. And that was the difference, I suppose, between people who understand it are scrambling for capital. Meanwhile, most retail are afraid to touch it now.
Listen, when you have conviction, when you've done the work, right, you can put on the trade, and irrespective of what the price action does, if there's nothing broken with it, what you're seeing the price action is fear and greed. That's what's driving price, right? And ultimately, fear goes through the market so much quicker than greed. But if it's not broken and you still have conviction on it, it's amazing how people's psyche works out. When the asset gets cheaper, they don't want it. For me, it's when everybody is selling it, I'm the guy that wants to step in and buy it, because I understand that only a matter of time, if your conviction is whole, that it will trade up. And so I think we were talking around the FTX Celsius debacle. Bitcoin was trading, last 16,500, and I was like, this is a great price point to leg into this trade. Nothing is broken. And so what you started to see is liquidations in the market, people getting margin called, all bad sentiment. That's when you buy. That's when you step in. And I remember talking to so many people being like, hey, you should really look at it, 16,500. They're like, oh, I'm going to wait till it gets to 14,000 or 12,000. I'm like going, why would you do that? So you're going to not buy the asset to try to get it $2,000 cheaper?
I remember you sending me screenshots of trades put on at 20. And a lot of the rumors were, oh, we're going to 10. And I was the same. I was like, I don't need the very bottom. But you need to realize, you can't be, I think being too greedy is what punishes you.
Absolutely. Get off zero. And also, dollar cost averaging in has always been the best strategy, right? And so you just buy either weekly or monthly, and whatever you can afford, right? You don't have to pick the bottom of this market. Actually, the hardest thing that you're going to have is not picking it at the low. It's holding it for a long period of time, and that's what you have to do with something like Bitcoin. By the way, I've been through 2 halvings and 3 bear markets. And actually, each of those bear markets, for me, have been a great time. I love a bear market because bear markets come and go. It's cyclical. And so they're a great time to accumulate. No one likes to buy something at the all-time high. But when you see what's gone on and how Bitcoin has developed, we've had an amazing last 6 months, especially with the Bitcoin ETF and it becoming more institutionalized. And there's good and bad about that. But certainly the best marketing for Bitcoin is its price action. And so, for me, it's a great time to continue to start to understand the asset. Like in the 15 years that it's been here, look where it's come from and look what it's actually done. It's amazing to see it. And by the way, it's never had any issues. It keeps on producing blocks and will continue to do so. And also, what I love about it is it's limited supply. And when you look at what's currently going on in the world, I mean, you just got to look at U.S. debt right now. It's $34 trillion. What are they going to do with the debt? You just look at the value of the dollar. It's down 98% since inception. You look at how inflation, I think someone talked about, the target rate of 2. You just have to look at the price of goods in shops and how much they've gone up. It probably feels like by 20 to 30%. How are you going to keep up with that rate? You have to buy assets that can help with inflation, right? Because your purchasing power of fiat is basically just being ripped apart. And that will continue to go because they've got no way out. They continue to print. There's no other way out of this.
You mentioned the ETFs. How do you think that structurally changed, and what are the positives and are there negatives, and what are they that you're seeing?
Yeah, when you look at the early days of Bitcoin and you look at the OGs, it was all about self-custody, right? It was all about having value exchange between you and I, right? A peer-to-peer electronic cash system. And things have developed and things have moved on, right? You hardly see a lot of people using it to buy coffees, right? It's become more of a store of value. It's a digital gold to hedge against inflation. And now it's an asset class whereby institutions want exposure to that. And the institutions that I've worked at don't have the ability to maybe hold Bitcoin or don't have the ability to open up lines with a Binance or a Kraken or a Coinbase. And so they have to find wrappers that they can face, counterparty wrappers that they can face. And with the evolution of the ETF and BlackRock stepping into that, every institution around the world can face a BlackRock of Fidelity. And so it's allowed institutional capital to get exposure to the underlying asset. Ultimately, I think it's been good for price. I think a lot of this price appreciation has gone up, but it's changing and it's evolving. It's becoming an institutional asset class which could be used for some type of speculation, but that was always going to happen. And this is the first time in history that retail, you and I, and hopefully a lot of people in the room, have been there before Wall Street, right? Main Street got in before Wall Street, right? This was a retail phenomenon. And that's just amazing to see that we front run the banks. And ultimately, I don't think we've even started to see how powerful these ETFs will be. Because when the ETFs go live, it takes an investment house, compliance, regulation, committees to actually go through and pass that. It's not like, oh, let's just put on the trade. It takes a long time to go through. And also when you look at, especially the US market, when you look at the registered financial advisors, when you start to see how much money they manage, it takes time for them to get okay with it. It takes time for the clients to move on. But we're starting now to see that roll out. And so it's great to see the price of Bitcoin, to continue to stay up at these levels.
Has retail, is there no longer the opportunity, do you think, for retail to front run institutions, or are we still slightly ahead of them because of the lag in?
Well, this is the great thing about Bitcoin. And unlike a lot of other investment offerings in the past, you don't need anybody to buy Bitcoin. You don't need me to buy it. You don't need Dinny to buy it. You don't have to go and give your money to somebody. This is power to the people. You can go open an account. You can get a Trezor or a Ledger. You can buy it and you can keep it. You don't have to give it to anybody. And that's what I love about it. It's yours. It's your bare asset that you hold. And there's a lot of power for that. That you don't have to trust anybody else with that. So I think that there will be sovereign nations. I think we'll start to see more companies put Bitcoin in their treasury, a little bit like what MicroStrategy did. And I still think that there'll be a lot more institutional involvement coming into the space. So I really do think we're only at the start of this adoption on the institutional side.
Super. And I suppose because you're a professional investor, what you must have a thesis on how this market cycle looks, or maybe a couple of theses on it. Maybe could you talk a little bit about that?
With regards to its cyclicality, I think the way that I view it, like I think in generations. Like I have a 10-year time horizon, and so for me, I'm like, okay, so let's look at the world, okay? Technology never goes backwards. Just look at how we communicate, since the social media days. Look how much our phone has now not just become a device to talk about, but runs everything. Look how banks are closing down. Look how everything is on your app. Look how your currency, your money supply is all going to be digital. I mean, just look at what the Bank of England are doing now with central bank digital currencies. Out of all the money supply in the UK, only 2% of money is actually in notes and coins. The other 98% is zeros and ones on your app. They're closing down banks because they don't want to have cash anymore. And so when you start to look at how trends are evolving, when you start to look at something like Bitcoin, what do you think is going to happen to it? Like the next generation of investors that come up. Like that's even changed massively. I mean, just look what happened with GameStop and Wall Street Bets, where the power of the community got together, realized that there was a short, and then basically started squeezing the short. Like the younger generations that are coming up are becoming so smart. I mean, I have a young boy, and all you have to do is give him your phone, and he understands how to interact with a computer. And so the next generations, as they move on from playing in video games, and they move on from buying in-game assets, and they're mining gold in whatever World of Warcraft game, when they come to the stage of investing, they'll get Bitcoin because they've already been doing it in digital environments. And you will show them a note or a coin. It'll be like your granddad showing you stamps. Like, it will be for the
They won't trust it.
They won't trust it. Why should they? I don't trust it. And so I think what I'm trying to say is that you have to look 10 years, 20 years, 30 years ahead, and you have to ask yourself, how is the world going to change then? And when you look at something like a digital store of value, it makes total sense. And so I think that when I look at it in those terms, that's how I put on the trade.
So you as a professional investor are thinking in decades rather than months.
Oh, absolutely.
Yeah, and I suppose that's probably the difference between a professional and retail.
Yeah, and by the way, you talked about volatility. Yeah, this is a high vol asset, right? And so you have to be very aware of that. So you have to position yourself correctly. You don't use leverage whatsoever. Any type of leverage that's used with a high vol asset like this, you're just going to get carried out. And so it really is dollar cost average in and store. And so yes, the price will go up or down, but if you dollar cost average in, then you blend that out. And second of all, how do you expect to have the returns, the best returning asset class of all time, if you can't deal with the volatility? Like, 20 to 30% down in Bitcoin was quite normal. Now you see, 10% and people are like, oh my God, it's crashing. It's like, no, it's just doing what it does. So if in doubt, zoom out. And when you zoom out over 5, 6, 7 years, you can just see from bottom left to top right. And so that's what I follow. I'm not interested in the price action, a daily, weekly, monthly. I don't care. It doesn't bother me. It's like, where is it going to be in 10 years' time? And let's put the trade on for that.
It's brilliant, yeah. I spoke this morning a little bit about pensions. And, in a pension, you're thinking in a decade, although we all want it a lot quicker than that, but it's like, could you just, my minimum requirement is to ask people to do a 4-year apprenticeship and then maybe try and do an 8-year apprenticeship. But ultimately, I think it's a good example that professionals are thinking in decades, not in what happens this year. And I think that's for any of the new people in the room, because we're well, it depends where you are in your Bitcoin phase, but a lot of people end up on the accumulation cycle, I call it. So it really doesn't matter what Bitcoin does in this cycle. When you really understand it, you're crossing your fingers and hoping the thing crashes, and all your friends say, I told you so. And that's when you can really take your action, as opposed to, I think when it's easy to buy Bitcoin is generally in hindsight, you realize probably shouldn't have been as greedy. And when it's hard to buy it, it's in hindsight, and it's always in hindsight that you can see it. You realize that you should have been greedy. And in the moment, it's very difficult, and that's why just having an actual strategy that you just action.
Well, I suppose what else are you going to invest in, right? Okay, so there's businesses, right? There's property, there's the stock market, or there's Bitcoin. But ultimately, the best investment you can ever make is in yourself, okay? And so knowledge is power. And so understanding and reading up about Bitcoin and arming yourself with knowledge is really important. But another thing which I absolutely love about Bitcoin, it's liquidity, right? And so, having a portfolio of investments, like what investment can you liquidate within 3 seconds? Right? If you need it for whatever reason that may be. Like, Bitcoin is liquid. And that liquidity should come at a price. Like, if you own real estate, or, you've got cars, or you've got stocks, it's sometimes very difficult to get out of them. Sometimes you don't have the liquidity, there isn't a buyer, you get marked down on it, right? But with Bitcoin, you've got perfect price action at any time. It's pristine collateral. And now what we're starting to see, which is great, and I love the Bitcoin space and the blockchain space in general, because it's got some of the smartest people that I've ever met just building great things. And so now we're starting to see a lot of products around Bitcoin whereby you can generate a yield, or you can use it as collateral and you can take out loans. And so we're now starting to see traditional financial products being wrapped around Bitcoin. And that's interesting as well. It's nice to see it mature like that. So, not only can be used as a store of value, but you can also then use some of the financial products that come with it.
Yeah, we're only in the early days of that. I think
we're so early. We're so early. Yeah.
It will be built with all the VC money that's gone into the space. There's so much products that aren't at market yet, but I'm confident that it will be there. Like, the money, VCs don't give away money unless they think they're going to get a result. Otherwise, they're not a good VC and they're not around.
VC funding is now back up to all-time highs into the crypto and blockchain space. It's nice to actually see a lot of money going into Bitcoin core development as well, and what we've seen with ordinals as well. And so I'm starting to see actually a lot of projects come that are built on Bitcoin, and I hadn't seen that previously. So that's really, really good to see.
Deadly, I think just for the last minute or 2 or 3, we might open it up to some audience questions. Does anyone have an investing question for Shane?
Why do you need yield on Bitcoin?
Yeah, you don't need yield on Bitcoin. It's being offered. It's something that you can.
Are there risks?
With a yield, yes, I think there's always a risk, right? Because you're taking your collateral and you're giving it to someone else, right? Now you're getting a yield for that, but there's a. We're back on. There is a term with that yield, and then the real question we should be asking is, well, where is the yield coming from, right? And how is it getting attracted? So, we've all seen other products being offered with crazy type of yields, which I've stayed away from. But we're starting to see yield generation within Bitcoin, and it's usually around the borrowing and lending market. Nice top, by the way. Pete's a good guy. He's done really well.
Anyone else there? Stick your hand up. Lawrence has the mic. Here we go. Lawrence up front.
So you said you're not intending on selling your Bitcoin. So
Nope.
Can you outline your strategy, I suppose, for somebody who wants to build a decent portfolio, but also be able to leverage and to use profit from Bitcoin? Because obviously buy low, sell high. So how do you, obviously you have a really incredible income outside of Bitcoin or something that you can sustain yourself. Do you get what I'm asking?
I think you were, why did I not want to sell my Bitcoin?
Yes, and so say for example like me, as a mum, wife, mother who wants to provide for her children, I love blockchain, love Bitcoin, want to build a really decent portfolio, but I also want to have a good life. I want to have the pension, but I want to live now. So what's your recommendation and advice to somebody like me?
Yeah, absolutely. I think dollar cost averaging, it sounds like you've got a lot of commitments being a mum. And so, you dollar cost average in, and over time, it really depends upon your time horizon, right? But assuming you're mid to long term, 1 to 5 years, you dollar cost average in. What we're looking to do is for that to grow in value, and then obviously, you start taking, your profits off the table for what you need it for. Maybe keep the investment in, the seed investment in, and take your profits. Everybody is different, and that's the great thing about Bitcoin. You can do whatever suits you. And so that would be great for that to be invested in and then to generate a return and then take some off the table. And that's what it's there for. Yeah, that's what it's there for. So good luck with it.
Okay, we have another question here.
Hi, I'm Tim. I'm a Bitcoiner and a hodler. The three risks that people often I hear about are quantum computing. Within a couple of years, will eventually break the 256 hash thing. The second one, that the block rewards for the miners are going down now, and the fees will either go up, that the miners will eventually give up, it'll become unprofitable. And the third one being, as the BlackRocks and Grayscales accumulate so much Bitcoin that they'll eventually become dominant and start to manipulate it like JP Morgan does with gold. So 3 risks. What's your thoughts on those?
Yeah, so I've heard the quantum computing thing many times, and I'm not that smart, and I don't know anything about quantum computing.
Your bank account will probably be affected first.
The second one was...
The miners might just...
Yes. So with regards to miners, they will get paid for transactions. And so it's not just the mining rewards for mining Bitcoin, but what we'll start to see is after the last block is mined, I think it's 2041, I think.
2140.
Sorry, 2140, yeah. So after that, we'll see the transactions on chain that they will get paid for. And then the third one.
Price manipulation.
Yeah, I'm not too sure about that. I think the gold market is manipulated because it's so inaccurate. With Bitcoin, I think everybody makes live markets is going to be difficult to do. And a lot of the time on those ETFs, it's the clients that have bought it. So although they're buying the underlying to offset it, I don't know if they're going to be able to manipulate that.
And with the miners, if you listen to the public mining companies, again, being professionals, they're planning for decades. They're putting plans in place for decades. They're not trying to survive the next 6 months. And that gives me confidence when I see, a company trying to become a legacy company as opposed to just a flash in the pan here to make some money and gone, with the infrastructure and the planning that they're putting in place. And I don't think it's going to be possible for the third part of your question for the capture, because the majority of the Bitcoin sits in the hands of people who believed in it, and it's up to them to give it up. And, to a lot of these people, the price doesn't really matter because they've already achieved all their financial dreams, and they're in it for the mission, and they're ultimately the people who have control of the Bitcoin. So it would mean them giving up control of it to hand it over to someone who they think isn't going to be best served in Bitcoin's interest. So for me, again, sort of that gives me comfort that because this was a bottoms-up movement and it started with the plebs, and ultimately it's the plebs who holds the majority of the Bitcoin at the moment, and because of proof of work rather than proof of stake, it's more difficult to centralize in that regard. Have we got one more, Lawrence?
Yeah, one more question here.
You've mentioned that you love to see trends early on. One of the trends that I envision in the next generation is that as multi-sig, custody becomes a thing, in the next generation, it's going to be much more difficult to have paper hands, and it's people will be less likely to get emotional and sell, because it's going to take a certain while to get all the keys together to sell. And then in FUDs, the sell volumes will always be lagging, and the buy volumes would always dominate, and that would make the price volatility go up in times of FUD, where the sell volumes will always be lagging because it's not going to be as easy to sell that quickly. So do you think this would be something to consider in the next generation? I mean, today it's much more easier because the people who are Bitcoiners today will definitely know where the signatures are and how to get them together. But our kids, our grandchildren, it's going to be much more difficult because those keys would be in trusts and stuff like that.
Yeah, so price inefficiency because of multi-sig. I would be interested to know, out of all the market participants which are trading Bitcoin on any given day, week, or month, how much of it would be on multi-sig? I don't know. I don't envisage that to be an issue, but I don't know. I mean, just look at the security settings that we've had since the start of Bitcoin. I mean, it's changed so much, and so I think there'll be other MPC, multi-party computation, there'll be multi-sig, there'll be a range of different ways to keep it. It might be retina scanned, I don't know, it might be fingerprinted, I'm not too sure which way it will go. All the guys from Israel look after a lot of the security, and they're usually the smartest guys in the room. So I'll leave it to them, but I don't think we're going to see inefficiency on price because of that, but hey, you could do.
Okay, guys, I'm going to say thank you very much to Shane Keogh.
Thank you, Dinny. Thank you very much, mate.
Thanks, man. Okay.